Hey everyone, and welcome back to 20s Investing with me. I've been absent the last 2 months mainly because I got lazy and I didn't think this was going to go well. But this time there's been a lot of changes to my portfolio. So over the last 2 months, I have been making a few changes to my lineup. First of all, my main change is I sold my AMD. This was mainly because I didn't think it had lots of potential, especially since I'm primarily a dividend investor and AMD didn't have any dividends, so I transferred it and I decided to buy Texas Roadhouse since I have lots of services and technology. I wanted to do something less in the technological department, such as Broadcom, chips manufacturer, JP Morgan, banking, Costco's a wholesale, so that's different than Microsoft is a services, and Visa is a services as well. But in credit cards, Moody's is a services, and Walt Disney is also can be considered services and entertainment. But I wanted to do something more in the restaurant business. So this time I sold all of my AMD, which was $1,114.53, and transferred it all to Texas Roadhouse, which we'll see later, but it does have a dividend. Texas Roadhouse is basically a full service casual dining restaurant chain, which offers assorted seasoned and aged steaks, hand cut daily on the premise and cooked to order over open gas fired grills. It has around 600 shops or restaurants, so I thought it was already a well established company with lots of growth and potential. Other new information that has come up, so Disney is actually up around 5%, which was one of my losers. Texas Roadhouse was something that I acquired a few days ago, so I'm still waiting on whether it's going to go up or down. This is barely any kind of change, so today it's up 1%, while the other day it was down quite a bit. Then something that we saw is that Disney's up around 5% since the last time, or even 6% since the last time I checked in. Then I also invested another $400, which were distributed to Moody's, which was 100, Disney, which was 100, Costco, which was 100, and JP Morgan, which was also 100. Four of my solid dividend growth stocks, and they're all doing relatively well. Moody's is up 19%, Costco's up 14, JP Morgan is up 30, and then Disney is down, but it's gone up. So I'm not too worried about that. So what I wanted to show was my dividend projections. So I have currently a dividend yield of 1.08 and a yield on cost of 1.26, which is a good growth for the dividend, which basically means that I'm receiving 1.26% on dividends from based off of what I've paid in the past for the price that I have. I have a projected annual income of $157.31. So looking at Texas Roadhouse, my frequency is 4 and the total annual income is $14, which is a big boost from the previous AMD, which was 0. Then my projected income is, this is basically the summary. As you can see, financial services is at $71, technology is at 42, consumer is at 14, communication services is at 13, and then consumer defensive is at 10. So as you can see, my quarterly income is at around 39. My monthly is around 13, daily is around 43 cents, and then hourly is 2 cents. I'm really hoping to get this hourly income to 3 cents. Basically, I base how well my dividend income is growing off of how much this hourly income grows. Once I see it step up to the next cent, although it may seem stupid, it's very satisfying for me. Then I also want to get quarterly to 40, monthly to 20, and then daily. Hopefully, eventually we can get $1, but there's still a long way to go for that. So my dividend yield has actually grown since I purchased Texas Roadhouse because AMD didn't have any dividend and this does. So Texas Roadhouse is a company that's, well, as you can see, it's grown exponentially. In the last year, it started at $94 and now it's at 170. So as you can see, their financials are really good. They've grown as well. Quarterly revenue has also exponentially grown. Hopefully, it's going to grow some more so I can benefit off of that. Then their annual revenue per share is also pretty high. So, as you can see, $69 on one share is really good. So they're doing well enough to give out dividends and they're stable enough to keep continuously grow. Their dividends have actually been growing. As you can see, their CAGRs, 1 year CAGRs at 16%. So in the last year, their dividend has grown 16%. Over the last 3 years, 26, 5 years, 15, and 10 years, 13. So they've recently become a higher dividend paying and growing stock, although they have been strong for the last 10 years. So some of the other companies that I want to check out quickly, because I have lots of faith in them, is Disney. So as you can see, over the last couple of years, it's been an up and down battle. Currently, it's pretty down since its all-time high was 201, give or take 202. But right now, it's sitting at a solid 95. So hopefully, we can buy low and sell high for the future and make profits off of that. They recently also introduced their dividend back. So as you can see, there was no dividend. Here there was no growth, no dividend. And as you can see here, minus 65%, that's because they took their dividend away and now they replaced it back because they're trying to come back to what they were at before. Also, they're economically doing better, as you can see. If we look at their financials, they're starting to do better than what they were. You can also look at that. It's also a dividend growth stock, but it's not doing as well as other companies, so they're expected to do much better over a longer period of time. As you can see here, they had a dip in their quarterly revenue, but now it's steadily going back up. So if I think right now it's time to buy. Remember, I'm not a financial advisor. I just give my personal amateur opinions. And so yeah, that's it for today, and I'll see you next time when hopefully I get to the $15,000 mark.